Joining us to talk about what happened and what you should do next is Barbara Doran from BD8 Capital Partners. Mike, we throw a lot of B's at you. Is this a bear market bounce or a legit bottom?
I think you have to be able to believe that both of those things could possibly be true. It's the kind of activity you see in a bear market. In other words, the biggest rallies tend to happen in the most stressed tapes, which this has been. I would say it's about a week late in terms of just how oversold the market was going into this whole period. By the way, we're only about 2.5–3% below where we were when Jay Powell had his press conference. Did he still foul everything up? Was it still a disaster? So we're going to have to rethink.
I think we should hike again now, given
well,
this
see,
move.
there you go. And that's how
going
fast
into
things
the Powell
move.
presser, the market was down sharply. I mean,
that's the
we
point.
got to right at the brink of a bear market. We closed Monday, what, 19.5 at least off the highs on the S&P.
19.8%. So therefore, it was a logical place, but we've had a lot of logical places where this market should have bounced. Today, we caught the bid. I think we didn't have as much of the forced panicky selling. It really seemed like an aggressive unwind coming into last Friday. I would have thought it was all done. Then Monday, you had this weird panicky day, half session. What I would say from here on, though, is the market was down enough that the strongest first rally is going to be just enough to keep the bears on their toes, but doesn't tell you where we're headed.
We should also say this is the biggest points gain ever for the Dow. The last one we just took out was 936 October 2008. That wasn't a great warning sign of good things to come for another few months. Barbara, what's your take? Will we do this? Are you now kind of deploying cash more meaningfully going forward?
Well, I think it's still a little premature. This was very encouraging because I do think the bottom is being put in place here because I'm of the camp that we're not heading into recession and the market is discounting recession and worst case, and has been oversold for a while. But I think when you've had this much damage psychologically, it's going to take some time. But if you look at Monday, when we had this extreme panic, the put-to-call ratio was a record high, and that corresponds with 2011 and 16, the lows in the correction. So I think we're bottoming in here somewhere, and I think you could start deploying capital this week, not aggressively, because this is not going to be a straight shot up. I think, yeah.
That's been the whole debate in all of this, right? Which is there a disconnect between what the market is telling us and what the economic data is telling us? And if you think we're not going into recession, then it sure looks oversold.
Yes.
That's what all the bulls, like Barbara, would say.
And it looks like there's value there if you're not going into at least an earnings recession next year, right? Because you really have discounted a lot of stocks. When something like 80% of all stocks are down more than 20%, when the average stock is down 33%, you've repriced for a much dimmer scenario going out a year. But the question is, are you going to be liberated from those fears that we're tipping into something ugly within the next 3 to 6 months?
Mike, we lament the impact of algos and index funds to the downside on those types of days.
Some people do, yeah.
Some people do. But should we celebrate that today, or should we point that that's probably a large factor in this move?
I think what you should point to is that the market does have a lot of these one-way days. And by the way, the last few days of the year, there's air pockets in both directions. It's not the most liquid market. An illiquid market means it can gap in either direction. But yeah, without a doubt, I mean, this is the market we have, right? The machines have been no more active in the last 2 to 3 months than they were in the year and a half before that, when in 2017 they smothered volatility to nothing, and in January when they shot the market up 8% in 3 weeks.
Right. We didn't ask where are the machines when the S&P didn't move 1% in, I don't know,
now, look,
record amount
you
of
could
time.
still make the case that we kind of got an overshoot to the downside in the last few days or weeks because there was an accelerated kind of mechanized selling going on. But again, you're right. It goes to the upside as well.
Huge day. Dr. J is here on the floor making a cameo in closing bell. We know it was a big day, Dr. J, with the Dow surging more than 1,000 points. What were you doing today?
Well, other than putting seatbelts on the toilet again, what was I doing, Sarah? I was, believe it or not, kind of listening to Scott Meinert of Guggenheim when he came on and was telling us he thought there was as much of a 50% chance that there could be a rate cut next year. I think the communication, we'd all agree, has been horrible to the public about things like meetings over the weekend with those bankers and things like that. That just spooks people. And I think today, after we saw that little bit of a bounce that turned into this gigantic bounce, I think they caught an awful lot of people that were newly short in the market and just caught them scrambling, trying to get coverage after they shorted into the hole here. And obviously that was a pretty bad decision.